Don't ask them, what do we know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I am Delta, an economist with over 20 years of investment experience in both traditional markets and crypto. Today, I will be discussing top 10 experts you should not listen to when it comes to investing in crypto. Mostly, these experts are experts in something else and not crypto, and their expertise, even in their subject of expertise, is suspect at best. Often, it boils down to old men yelling at clouds because they don't understand technology. We've all heard these experts on the news or in the Wall Street Journal or on Bloomberg talk about crypto in a negative light. Why? They often have a vested interest for it to fail because they benefit from the existing system that works just fine for them, that has made them rich and keeps them rich and in power. Secondly, people are very ignorant. It is technology, and they have not invested enough time to understand the technology, and yet they have a very strong opinion on something they do not understand. I would like you to be very cautious when listening to investment experts that are not investment experts in technology when they start talking about investing in crypto, because crypto and blockchain is a technology, and it takes a technologist to really understand it and invest in it. I would encourage you to have a critical eye when hearing pundits, experts, politicians speak about crypto in the news, or if you read an article that paints it in a negative light. Question the motives of the person that is being interviewed, the publication publishing this news, and their expertise. Are they actually experts in technology and blockchain in particular, or do they have an ulterior motive? So it boils down to mostly old men yelling at clouds. Why crypto is in my opinion, a good investment vehicle, a good asset, comes down to something called accredited investor rules, which says unless you're an accredited investor who has made over $1 million or has $1 million, you are not fit to invest in companies at an early stage because you're not sophisticated enough. If you were, you would have $1 million, obviously. Now, your sophistication is based on your money. So if you have $999.999 thousand and you're missing $1, well, you're not accredited. Somehow that extra dollar, marginal dollar, makes you an accredited and wise investor that is sophisticated enough to understand early stage investing. If you inherited $1 million, this somehow makes you a sophisticated investor. Now, if you have only $500,000 that you made through investing and clearly are sophisticated, well, you're not sophisticated enough. The person that inherited $1 million is more sophisticated than you at choosing investments, and you are excluded from investing in early stage companies that have insane potential. Early stage companies, you buy at a valuation that is a few $1 million, maybe 10 million, 20, and then those companies go public in the billions of dollars. So your very small investment will be 100x, maybe 1000x. And then if you hold on to it while it goes public, let's say like Tesla shares, you can make tens of thousands % back that you could not have gotten if you bought the shares after they IPO'd in the public market. Getting in early is a way to make outsized returns. Now, VC investing and early stage investing is very risky, but it is similar to when I discussed investing in options. If you have a positive expected value, which means you can invest in 10 companies, let's say, and if only one of them succeeds, it will make so much money that it doesn't matter if the other 9 go to zero, you will still be up a lot. So that's how VC investing works. They just have to be right more than zero, and higher that percentage goes, the better. Now, my biggest gripe with the accredited investor rule is the fact that Las Vegas exists and that there are lotteries. The problem is the so-called investor protection law when there are still state lotteries, online gambling, Vegas casinos. There's nothing preventing a person from walking into a casino in Vegas and putting it all on a roulette table on their lucky number and losing it all, or spending their whole paycheck buying scratchers. You can literally gamble your money away on very low probability odds of you making it back or winning anything. How is that investor protection? That's pure gambling with negative expected value. But if you spot a promising company that you can invest in early, you're not allowed to do it unless you're an accredited investor. Why does crypto get such a bad reputation by so-called experts? Well, experts don't want you to get rich and the accredited investor loophole because they want the whole pie. If everybody can bet on early stage companies, it crowds out VC firms, right? They can get a smaller share. They have more power now dictating terms. They get a bigger cut of the company. They say, we'll give you $1 million for 30% of the company. But if 1 million people put in $1, maybe we would only demand 10% of the company, right? Experts have something to lose if crypto succeeds, a vested interest in traditional systems. Now, another thing that excludes U.S. regulators and politicians have been anti-crypto for some reason. One reason is obvious. They want to maintain their hegemony on the reserve currency of the world, which is the dollar. But also, for some reason, they don't want you even getting free money via airdrops. If you participate in early stage crypto projects that haven't launched any tokens, that are just experimenting, using their testnet, playing with their apps, often you are granted something called an airdrop, where they just give you free tokens once they launch a project fully to reward you for helping them test it out and use it and being an early adopter. Well, if you're a US citizen, you're not even allowed to claim this free money for some reason. How is this protecting you? All it's protecting you is from free profits, from free money. So if I use an app on my phone and I'm entitled to $10,000 just because I am in the United States, somehow this is protecting me from having this money? How? I will try to maintain my calm as I discuss the insanity of regulators, but I will not focus on them. Just a brief mention of accredited rules and regulations that exclude individuals from participating in this new technology and a way to invest in projects, technology, and companies early, where you can have massive gains, unlike buying a company once it goes public or afterwards. Insanity is doing something over and over and expecting different results. A quote attributed to Einstein. Despite everyone knowing the famous Einstein quote, for over 13 years, politicians, economists, news anchors, famous investors have called the end of Bitcoin and the crypto economy. One of my favorite trackers is called Bitcoin Obituaries. I will put a link in the description below. Check it out. Where at the time of writing this, there were 444 published Bitcoin obituaries that called the death of Bitcoin and the crypto economy as a whole. Whenever you get emotionally triggered by an article, headline, or a pundit suggesting that crypto is dead, I recommend you head over to this website, zoom out, and see all the times that experts have called the end of crypto, end of Bitcoin, and have been repeatedly wrong for over a decade and a half. So here is Bitcoin obituaries. Slight update, 474. But wait, there's more. Let's see some of the recent obituaries. Bitcoin headed for endgame at 60,000. Called Bitcoin top in 2021. Bitcoin went to 75,000. Bitcoin has failed at 51,000. This is in February this year. A month later, Bitcoin went to 75,000. BlackRock will destroy Bitcoin at 42,000. This is just before the ETFs. Again, it went to 75,000 after this. So, had you listened to any of the recent obituaries, or some of these, it would have been a bad idea. All the times, this is all these articles transposed on top of the price chart. So pretty much anywhere you look at, even at the very, very top of 2021, it was wrong because it kept going higher eventually. Obituaries was number 1. Number 2 is famous bulls. Here I have 2 examples of famous bulls. I can name plenty of others. Might even put myself in that category. I am a permabull of crypto, but I would like to say I'm quite realistic about price expectations and the adoption trends. John McAfee, famous CEO of McAfee Antivirus Software, in 2017 predicted that Bitcoin would reach 500,000 to a million by 2020. Didn't happen. Had you bought it at the top, whatever, $60,000, using borrowed money, expecting it to go to $1 million, you might have gotten hurt in that process listening to John McAfee. More recently, last year in March, Balaji is a famous technologist, VC investor. He worked at Coinbase, so he actually has the right credentials to be an expert in this. And he bet $1 million that the Bitcoin would get to $1 million in 90 days. He lost that bet. Now, this was with the banking crisis that was happening last year, and he thought there would be flight to safety, and he was right, but not as fast as this. Bitcoin might hit $1 million eventually, maybe not too distant future, and Balaji will have been proven right. Also, John McAfee. But they both had a sin. Their sin was time. Saying that the price is going to go up is not wrong because historically you've proven right. Saying that the price of Bitcoin or crypto will go to a specific amount in a specific amount of time makes you an oracle, a soothsayer, somebody who can see the future, which nobody does. And people that do are just getting lucky when they do make a prediction that hits. There have been some people that have made repeated predictions about the price of Bitcoin that has been pretty spot on. But even then, I would not place my life savings betting on anybody else's timeline. Now, you can bet on the general trend. The price is going to go up over time because of fundamentals and because the adoption curve of technology, how many wallets are created, how many humans on planet possess Bitcoin, a finite supply, for example. There's 21 million of them. There's 8 billion humans. If everybody wants just a tiny fraction, it's likely going to go up, supply and demand. But predicting a price in a certain time period is very difficult. But giving it in a short time frame is, I think, a sin of investing. Kathy Wood at ARK has done similar. Her research suggests by 2030 it'll be 1 million or 2 or 3 million. That is, what is that? 5 years from now, 6 years from now, 5.5? Maybe, but still. I wouldn't bet my life savings or all my investments on other people's timeline. Next up, the epitome of old men yelling at clouds. Warren Buffett and late Charlie, RIP, are the epitome, the personification incarnate of old men yelling at clouds when it comes to crypto. I think Warren said, I think it's just disgusting that people have been taken by this in 2018. If you look at the price performance of Bitcoin from 2018 till now, you're up bigly. If somebody else is trading turds and you decide you can't be left out, he's talking about FOMO, but he is using a unflattering analogy for Bitcoin and turds, which isn't nice. I don't welcome currency that is useful to kidnappers and extortionists. Oh, okay, so you don't like dollars? Because I'm pretty sure most kidnappers and extortionists use dollars, so you don't welcome it. Or are you being a hypocrite? In a famous interview, Warren said, if you owned all the Bitcoin in the world and you offered it to me for $25, I wouldn't take it. Because what would I do with it? I would have to sell it back to you in some way or another. It's not going to do anything. That's true of every stock. What are you going to do with a share of Berkshire Hathaway? You have to sell it to somebody to get something out of it. That's how all investments work. What is he talking about? Again, old man yelling at clouds. Wouldn't be surprised if it's not around in 10 or 20 years. Also, that's a fair assessment. People buy it and sell it because it's going to go up, just like they did with tulip bulbs a long time ago. Well, no. Tulip bulbs have been largely exaggerated, and if you read my Afro Samurai analogy for crypto, or watch one of my videos, I dive deep into the fallacy and the historical misremembering of the tulip mania. In Netherlands, there was this craze where certain individuals bid up the price of rare tulips, much like people will bid up the price of rare collectibles like baseball cards. This was very few people. This was not a contagion of the whole country. It was very contained by very few people in Netherlands as a moral contagion to be feared and not to invest. This did not destabilize the Dutch economy. The Dutch are doing just fine. I respect Warren, but he's 100, and Charlie was 99 and no longer with us. Both of these gentlemen are legends of investing, mostly because they lived to 100 years, and compound interest is powerful, and that's how it works. If you invest for 100 years, you're going to be a billionaire. It's hard not to be, especially if people are paying you 2% and 20% of the gains of just the S&P 500. You would have done better. So, they are old. One of them is no longer with us. Please don't listen to grandpas yelling at clouds when it comes to crypto, when deciding whether or not to invest in it. If you decide not to invest in it, that's fine. But please don't listen to people like this. Okay, this brings us to our friend JMO. JMO from JP Morgan and Chase. JMO Diamond doesn't have diamond hands, despite his hand right there being diamond shaped. Never you mind that. He calls it a fraud and it will ultimately blow up. And yet, despite that, JP Morgan Chase itself offers Bitcoin related services and has created their own digital coin called JPM coin. It's more of a do as I say, not as I do, because if you do as I do, you'll get rich too. So do as I say, so you need me. Also, the hypocrisy of Jamie Dimon talking about Bitcoin use for fraud when JP Morgan Chase has paid billions of dollars in fines. Since the year 2000, in the last 24 years, they have paid $39 billion in fines for money laundering violations. I don't think all of Bitcoin ever used has ever laundered that much money as this one bank that is being used as an expert witness in front of Congress to why you shouldn't use Bitcoin. Because if you're not laundering money with Bitcoin, then use us. Recently, this year, they've paid almost $100 million for other money laundering. If anybody's laundering money, it's the traditional banks. Because you can't see their books. Bitcoin is on the blockchain. It's a public ledger. You can see it. You can trace it. It's not anonymous. Criminals don't want to use it because only dumb criminals use it and they get caught. That's why right now, United States is selling hundreds of millions of dollars. Germany is selling, I think, $600 million of Bitcoin they got from criminals because criminals are dumb. They get caught because they use Bitcoin that's traceable. Furthermore, JP Morgan just agreed to pay $1 billion in other fraud-related things because they defrauded the precious metals, suppressing the price, I believe, silver and treasury markets for years. So they can just defraud all of us and continue to exist and be called as an expert witness by Elizabeth Warren to testify why Bitcoin is bad. I don't want to say pot calling the kettle black, because they are the kettle and the pot. And the darkness of illicit finance is the traditional banking system. They're the gangsters. They control the politicians. They steal your money. And what? They pay a fine if they get caught. What about all the times we didn't catch them? How many hundreds of billions of dollars have they stolen? Don't listen to bankers who benefit from defrauding the American people and other people around the world, charging exorbitant fees for you to send remittances to your home country. Let's say you worked in a more developed country because opportunities were better and you were smart and you somehow made it to America or another wealthy nation where you can get paid for your skills, and you want to send some of that money back home to your family. Well, you get charged a lot of money to transfer money across borders. It takes forever. I recently sent some money to friends in Europe, and they didn't want to use crypto. I offered, they didn't want to, and they had to wait like a week to get the money. I had to pay $25 in fees for a wire transfer, all because banks are just the middleman that we don't need. I could have sent the same amount of money instantly to them. They would have gotten it in seconds, and it would have cost nothing. This is the power of crypto. Why did the friend in Europe not want to accept crypto? They're not really a friend yet. I will convert them to the good word of Satoshi. 21 praises be upon him. It is a religion. Fuck. Next up, my favorite peeps, my homies, the economists. I'm going to have to take a dig at myself at this one. Modern economics, Keynesian economics, is dumb. There, I said it. Well, many schools that have granted me econ degrees want their certifications back. You can have them back. Fuck these platinum plaques. You can have them back. I knew better economics back when I was playing in the Cabbage Patch. Nouriel Roubini called Bitcoin the mother of all bubbles, just because it is volatile. Who is Nouriel Roubini? Well, he is a professor emeritus from New York Stern Business School in New York, political economist, a pundit, and anti-cryptopian. Now, this is just a man that refuses to expand his worldview. There are many like him. Again, this is an old man, not a technologist, an economist, a dig in myself, a Keynesian economist that has not invested enough time studying the tokenomics, the economics of crypto, to understand its value. Now, Mr. Roubini is partially Turkish and Iranian. I would think with his familial background, he would be more open to understanding crypto. One, note, good luck sending money to family in Iran using traditional banking system. Go ahead, I'll wait. You can't. Second, Turkey. Please look at Turkey's inflation rate and tell me that the Turkish people would not benefit from having dollar cost average their savings into Bitcoin pretty much at any point in time. When you have hyperinflation, like Turkey does, it is a life raft, as Michael Saylor has put it. If you are experiencing hyperinflation, you are drowning. You are looking to get off the boat that is sinking. If Mr. Roubini ever sees this, I hope he just answers me, how do you send money to your family in Iran, or they to you? And how do your family members, if you have any in those countries, I'm not assuming just because of your cultural background that you have family there still, but let's assume for the sake of this argument that you do. How do good people of Turkey prevent hyperinflation from their life savings? If everybody had access to crypto, and most people have phone, they could convert whatever Turkish lira, I believe it's called, into crypto and preserve their purchasing power. But if you want to listen to this guy, have fun staying poor. Next. Oh God, I'm wearing a blue shirt and I'm bald. Damn it. Please don't confuse me for this guy. Please confuse me with anybody else, but not this guy. Jim Cramer, if you don't know him, is a host of CNBC show called Mad Money. And as this advert here will say, watch TV and get rich. If there ever was a dumb thing to say. Cramer has flip-flopped a lot. He's pro-buying Bitcoin when it's at the top. He is anti-buying Bitcoin when it crashes down because it's a volatile asset. He just changes his mind with the wind. And had you just done the opposite of whatever this man suggests, you would have made a hefty return. There's a ETF called the Inverse Cramer, which does just opposite of everything that Jim suggests and is quite profitable. This brings us to one of my favorite anti-crypto people, Mr. Peter Schiff. Why? Well, I wouldn't say I don't know Mr. Schiff. Well, I don't know him in person. I have met some other people we are discussing here today. Not Mr. Schiff, but I feel I know his mind. I've read at least 3 of his books because he was one of few people that correctly called the housing crash in 2007. I believe it was from this book, Crash Proof, which put him on the map as somebody you should listen to. But please take a look at this. Mr. Schiff is a gold bug. Somebody who hoards gold, invests in gold, buys gold mining companies, and wants to sell you his gold because he can't do anything with it. It is a useless yellow metal. Somewhat used in computers, very little. Mostly bought by our good friends in India as jewelry, also as a store value, because historically it has been a store value, a sound money. Sound money actually gets its terminology from gold. The way you would test if it was a real gold coin is you would throw it against a known surface like a rock or marble, and if it is gold, it would make a distinctive pitch that sounded like gold. If it was aluminum, it wouldn't sound like gold. If it was something else, it would not sound like gold. So the term sound money gets its name from gold. Also, it has become known as sound money for being stable and a good store of value. So when people talk about sound money, they're talking about a money that holds its value over time and its purchasing power, as gold has historically done. Arguably, crypto is sound money. Ethereum, in particular, is deflationary, making it ultrasound. Ultrasound money. So here is Mr. Schiff. When Bitcoin was $1 and gold was $1,700, he was saying terrible. Now, in 2023, when I pulled this graphic, Bitcoin was $42,678, and Gold only went up about $300. So, I think this guy should be listened to after being wrong for over a decade. He's still doubling down. But check this. The green line here, this is gold. Right? Since 2015, it is up like 100%. Not bad, right? But look at Bitcoin. It was, what is this? Under 1,000? In 2016, you could have bought it for $800 and gone up here. What is that? What is that? What is that a percentage? Oh, 21,600%. You could have been up, while gold is up 100%. Which would you rather have? At every point along this timeline, Mr. Schiff has been saying, don't buy Bitcoin, buy gold. If you had listened to him, you would have made very little return. You would have been better off investing in the S&P 500 or NASDAQ. If you bought the FANG stocks last year, you would have made 75% in 1 year. Let's see what is he saying now. Mr. Schiff says, based on the trading patterns of the ETF inflows, it looks like smart money is selling Bitcoin in the spot markets while dumb money is buying it through ETFs. So smart money, here Schiff is saying that Bitcoin holders are the smart money that is exiting, selling it their bags spot, while dumb money is buying the ETF. Listen, history has proven this man wrong over and over and over for like a decade and a half, right? So at what point do you have humility to admit you were wrong and say, hey, you know what? Looking at this chart, empirical evidence of me being wrong, perhaps there is something here. Why don't you buy 50% gold and 50% Bitcoin? That would have been sound advice. Put something. If you put in a very small percentage into Bitcoin and everything else in gold, you still would have done so much better. Now, Mr. Schiff, I have read your books. Crash Proof, Bull Moves in a Bear Market. And his overall thesis in all his books and everything he says is, whatever you have, it's going to go down, buy gold. It's great advice if you have Schiff for brains. Schiff is saying that because of the ongoing sell-offs from governments and bankruptcy courts, that 70% of those who bought the ETF are in the red when it's $54,000 level. And if it's below 38, then everybody will lose money. This makes sense because ETFs launched at $38,000. So you couldn't have bought an ETF for any cheaper. So when everybody that has ever bought the ETF, which is impossible because if I buy it, somebody else sold it to me at this moment, there's always a buyer and a seller at every price. But let's say it goes up to $76,000, which is the highest price ever, and 100% of people are in profit. Will he say anything then? I don't think so. I think he'll be quiet until the price goes down 20-30%, and then he will crawl out of his cave again to say, buy gold. Next up, central banks. Central banks are the people that are inflating your money away along with politicians and the reason you need crypto. But I digress. Let us go into my prepared statements. My good colleagues of central banks. I worked with these people. Honestly, they're doing the best they can to make themselves rich. Cryptocurrencies are a highly speculative asset They claim to be a currency, but they're not, says Christine Lagarde of the European Central Bank. She's the president and has often expressed skepticism. Now, Bitcoin and Ethereum are increasingly being used as currencies. For example, El Salvador has made it a legal tender. And many businesses are accepting it. Now, this is not a big deal. El Salvador, very small country, and even in that country, not a lot of people use it. Bitcoin is actually not a good currency. But if you use USDC coin on base, it will cost you, I think, literally zero to transact and extremely fast. It's faster than Visa and it costs less. So why would you not use that to transact in dollars? Yeah, Bitcoin can, at its current state, I'm not going to be a Bitcoin apologist, but cryptocurrency has solutions where Bitcoin has failed. Bitcoin is a store of value. Its whole premise is it is extremely secure. It is the strongest computer network in the world, securing a store of value. You can use it to buy a house and you might wait an hour or 2 or 10 for confirmations of transactions. And it's not going to be cheap. It might cost you $10, $20 to send $1 billion. Ooh. But other cryptocurrencies like Ethereum have solved this problem of scale and speed. Notably, 36 ongoing central bank digital currency pilots, including European Central Bank, China, Brazil, India, and UK, are happening. Right now, China has the digital yuan in 260 million wallets across 25 cities. Why are all these countries trying to make digital currency while saying digital currency is bad? So they can control it. As of 2024, a significant number of central banks around the world are exploring CBDCs. Specifically, 94% of central banks are actively engaged in researching or experimenting with this. But why? Because they want to control the money and you. Instead of proof of work, they prefer proof of weapons, is what the US dollar is backed by. If you ask people like, what backs the US dollar? The US Army. So it's proof of weapons. And central banks want to control currency and print as much of it as they can. Why? I don't want to lecture in this fun series of why you shouldn't listen to experts when it comes to crypto, but a very quick econ lesson on something called the Centillion effect. The Centillion effect is a theory from the 18th century French-Irish economist Richard Centillion. It describes an uneven impact of changes in money supply on different factors of the economy depending on how and where the money is introduced. So, if you are closer to the money printer, you get the money sooner, and thereby you can purchase stuff at current prices. But then, once that money is felt throughout the economy, there will be inflation, and all those goods will cost more. You got to purchase those goods and assets cheaper than everybody else by getting the printed money first. That is what the Centillion effect is. Your proximity to the money spigot gives you much more wealth and purchasing power. Central bank policies implement this through quantitative easing and new money outflows, where first financial institutions and asset markets get this money. They get to buy up all the stocks, buy up all the real estate, and then them buying it makes the prices go up. And then when you go to buy it, you don't have as much money because they got it for free and you have to save it and earn it. They just make up the money out of thin air, diluting your money. An example of this is money that the government spends disproportionately on the defense contractors infrastructure projects leads to localized economic booms and inflation in the broader economy. If I am selling missiles that will be shipped to Ukraine, for example, and the government gives me billions of dollars, well, I just got billions of dollars that didn't exist before. There's an equilibrium between supply and demand of money and the goods, and now there's a disequilibrium. There's more money than there are goods. Goods remain the same, didn't they? So I go out and I buy up stuff. As I buy up stuff, that creates more demand. As if there were more people that wanted to buy it. No, that's just me with more money. So when you go to buy something, I can sell it to you for much higher than I bought it. Me buying it increased the price. This is an important point. The person that got the money first benefits the most from purchasing assets at their pre-inflated prices. Their purchase of the assets actually sucks away supply and adds to demand, making the price go up. Simple economics, supply and demand. The supply of goods is the same, but demand goes up because of excess money that's been introduced in the system. It isn't instantly felt until the person purchases assets and introduces that new money in the supply. Now there's more money, aka demand, in search of a constant supply. Supply and demand. The only thing in economics you can truly trust is when more things are in demand than there is supply, the price will go up. Now, their act of purchasing the assets makes the price go up, and they're happy to sell it to you later, making you poor and themselves richer. Number 9, rich people. Here is an example of a rich person that most humans will recognize, Mr. William Gates, or as we call him, Billy. Billy here is the billionaire co-founder of Microsoft. Excuse my typo. He's a billionaire. He says that Bitcoin and crypto is 100% based on greater fool theory, which holds that overpriced goods will increase in value when there are enough buyers ready to pay more for them. This is true of everything. Anybody that buys a stock, a share of a company of Microsoft from you, is arguably a greater fool. You're selling it to them because you think the price will go down and you're getting a good price for it. Being rich doesn't give you an opinion that weighs more than a poor person's does in any other subject than the one that made you rich. If Mr. Willie here wants to lecture us on operating systems, then we should probably listen. In fact, Billy would be even more rich if he hadn't listened to a rich expert named Warren Buffett. Billy here would be a trillionaire, not just a mere billionaire, if he had kept his Microsoft shares instead of selling them per Warren Buffett's advice. He divested and now is worth 10 times less than what he would be worth had he held on to his Microsoft shares. The expert we shouldn't listen to is proven by one expert we shouldn't listen to giving advice to another expert we shouldn't listen to. Bill Gates would have $1.2 trillion right now had he held on to his Microsoft shares. He was an expert in operating systems, internet, and he listened to some old guy that's an investor in Coca-Cola that doesn't know jack about computers. And using his amazing advice, he lost 90% of his what would have been wealth. Thanks, Uncle Warren, for the great advice on investing in technology. $1 trillion that Bill Gates could have had says hello. Now, I'm going to throw in celebrities with rich people because rich people and celebrities are kind of synonymous. Bill Gates is a celebrity and we know him because he's rich. Movie stars are known because we watch movies. Now, rich celebrities may have something to offer in terms of business. Might not be bad to listen to 50 Cent or how he sold vitamin water for billions of dollars. He's an entrepreneur. If you want to make a beverage business, hey, listen to 50 Cent. Guy did it right. If you want to listen to Mr. Damon on how to get a sponsorship for a crypto exchange, well, he probably got a lot of money for this. You know what I'm saying? But you shouldn't listen to him when choosing your crypto exchange because he doesn't know anything about crypto security or other things. He probably doesn't even use crypto. He was just paid to be a spokesperson during a Super Bowl ad during a massive bull year in crypto. This is peak 2021, where crypto prices were hitting all-time highs, and there were 6 Super Bowl ads from crypto companies. Here, Mr. Damon was talking about Crypto.com, which, to my knowledge, is a legitimate company app. They bought a crypto arena in LA, I believe, naming rights, and has not defrauded customers. But it's a terrible exchange that charges a lot of money for you to take your money out. They let you put money in, but you can check out any time you want, but you can never leave unless you pay a lot of fees. So they have a business model of getting you in through the door with very terrible interface and then charging you a lot to exit. Mr. Damon was just a victim himself of being offered too much money to promote something he was not knowledgeable about. I would not blame him as much as I blame Bill Gates. All right, last one. Brings us to number 10. Expert you shouldn't listen to when it comes to crypto. This is famous economists. We already covered one. Nouriel Roubini. Arguably, central banks is just famous economists. Here is Mr. Paul Krugman, a Nobel laureate in economics, who is very critical of crypto. Now, I met Mr. Krugman. He came to speak at my company's conference one time. A lot of hedge funds came to listen to his wisdom of economics. I mean, why else would you have a Nobel Prize? You must be a genius in technology of something. So Mr. Krugman described cryptocurrency as useless, wasteful, a niche, only valuable due to hype and speculation. Okay. One of his quotes are, cryptocurrencies have no backstop, no tether to reality. Their value depends entirely on self-fulfilling expectations, which means the total collapse is real possibility. Okay, Mr. Krugman, you seem to be quite certain about technology. Let's see what you thought about internet. Well, Mr. Krugman also famously made a prediction about internet in 1998. It didn't pan out as he expected. He stated, the growth of the internet will slow drastically as the flaw in Metcalfe's law becomes apparent. Most people have nothing to say to each other. By 2005 or so, it will become clear that internet's impact on the economy has no greater impact than the fax machine. This man doubted the impact of internet. Hindsight is 2020, and we can say, Mr. Krugman, you were wrong about the most important technological advancement of the human species. Maybe you shouldn't talk about technology because you're not an expert in that. You do know how to plot a supply and demand curve, perhaps do a regression analysis, fit some data, but this man doesn't know jack about technology, as evident by his prediction about the internet being like the fax machine. Also, this man's net worth is a few $1 million. There's a TikTok kid yesterday that made 10 times that on a meme coin. Also, when choosing to invest in technology, perhaps looking at technologist investors who have been successful investing in technology that are billionaires might be a better start than listening to an economist who doesn't know anything about technology. I would suggest the firm Andreessen Horowitz, for example, founders are billionaires from investing in tech companies. Mr. Krugman is a millionaire, barely. So when choosing who to listen to when it comes to investing in technology, would you take advice from this guy who clearly predicted the internet incorrectly and doesn't have that great of a net worth? Or would you listen to a multi-billionaire who's made all their money, who have made all their money from investing in technology? One of those is heavily investing in blockchain and cryptocurrencies. I'll let you take a guess which one. It brings me a little bit of pleasure to flog this famous economist, an icon of my profession, but he should really stop talking about something he doesn't understand, that he's not an expert in, and continuously wrong. He's probably besties with Peter Schiff and will continue to be wrong year after year, year after year, year after year, and will get a call from the news media when crypto goes down 30-50% saying, how did you know you're always right? Tell us it's going to go to zero. It's not going to zero. For example, Bitcoin going to zero is impossible. I will buy all of it. If it goes down to a penny, I'll buy all of it and it won't be a zero. So anytime somebody tells you it's going to zero, is lying to you. It is impossible to go zero. There's people like me who will just buy it as a collectible for the shits and giggles of owning all the crypto. But guess what? Never will everybody sell. We're never selling. We're never selling. So choose your thought leaders carefully. I will give you two to juxtapose for your viewing pleasure. I have strong opinions, but they are loosely held. This I have picked up as a mental framework from Mr. Mark Andreessen, a co-founder of the most prestigious VC firm in Silicon Valley, Andreessen and Horowitz, also known as A16Z. One of the most impressive firms that invested in Facebook, Google, you name a tech company, they had some early shares and backed it and helped it succeed. I would guess that Mr. Dr. Krugman would gladly switch bank accounts with Mr. Andreessen any day of the week. I wonder why. So, when choosing who to listen to when it comes to crypto, choose your thought leader wisely. In his latest article, Mr. Krugman writes and opens the door to possibly being wrong. Now, maybe those of us who can't see what cryptocurrencies are good for other than money laundering, tax evasion, are just missing the picture. Yes, Dr. Krugman, you're missing the picture in this of a way. Kindly let me help you or you'll drown, said the monkey putting a fish safely up a tree. A quote by Alan Watts, and what I think about every time I hear an expert, a politician, or a regulator trying to protect me from crypto profits. So these were the 10 experts you shouldn't listen to about crypto, articles about Bitcoin, also hyperbulls, both saying it's going to fail or that it's going to wildly succeed. Of course, Mr. Warren Buffett, please don't listen to him. Jamie Dimon has vested interest. Famous economists like Nouriel Roubini and Paul Krugman don't know anything about crypto. Jim Cramer, come on, that guy is clearly on some psychotic medication. Peter Schiff wants to sell you gold. Central banks want to control your money. Celebrities, including rich people, have nothing to offer you because they did not get rich off of crypto. So they have no insights on this industry. Now, I will put myself as number 11 here. You shouldn't listen to me when it comes to crypto. But just like you shouldn't listen to Mr. Peter Schiff, despite me disagreeing with him, also people like Nasib Taleb of the Black Swan are a couple of people that I disagree with, but I think they have something to teach me. What I have learned from these experts, some that I have respected, some that I have marginal respect for, is that as the island of our knowledge grows, so does the shore of our ignorance. We must be aware of what we don't know. Being overly bullish, this asset class might be my downfall. Perhaps I should diversify away, but I fear that will land me in the same boat as Bill Gates. Not terrible company, but 10 times less wealthy than I could have been had I kept my bet concentrated in one thing I am an expert in one thing that I have somewhat an advantage in. If I sell all my assets and tomorrow start investing in real estate where I have little experience, I doubt in a decade or two I will have more money than if I stay invested in tech stocks or crypto. I hope seeing all the ways experts are wrong about crypto at least gives you a more discerning lens, not to let them stir emotions in you to make you afraid, to make you not invest in this asset class, or to sell if you are invested. It is a volatile asset class. Many things do go to zero, especially new things. And you should always do your own research. It is hard to do your research. It takes time. One of the best ways I found of doing research is finding trusted filters, people that I follow on social media, whose books I read. I read Mr. Schiff's books. I feel like he has some valuable knowledge. But when it comes to crypto, I feel like he is not a person I should listen to. Mr. Nasib Taleb, Black Swan. I think he has amazing insights on unexpected risk, unforeseen collapses that models do not take into account. I think Yuval Harari has great concepts about technology and history, but is also blind to crypto. So despite an expert in some field not being knowledgeable about crypto, doesn't mean they don't have anything to teach us that's useful in crypto investing. So with a discerning eye and cautious approach, I hope you are better equipped to spot experts that are not experts in crypto or crypto investing and not give too much weight to their opinion. Does not hurt to hear the opposite side of things that you are possibly blind to, but the 10 people that I have mentioned here are clearly incapable of doing such a thing. I hope you are better than them in letting the opposing views in and letting them battle to see which one is empirically correct. Thank you for watching, and as always, may the force of compound interest be with you. Peace.
Watching charts, I'm in the know. Smart move, delta tracking all my stocks, I beat my revenue. Crypto shifting, stocks are lifting, watch my net improve. Portfolio diversified, I'm the fiscal dude. My phone pings with every gain, that's how I stay in tune. Investing with a keen eye, swear this app's a boom. Balancing the risky bet, stability and swoon. Financial freedom in my grasp, I reach it, watch me zoom. Yeah, that's me, on my phone. Tapping Delta, seeing wealth I've grown.